few years back, you may remember there was a team. They were called the Houston Astros.
Uh-huh.
And they had the lowest payroll in Major League Baseball.
Mm-hmm.
And they made a decision. We are going to tank. We are going to get financially sound for a couple of years.
Mm-hmm.
And then we're really going to make a run.
Yeah.
And they turned things around very, very quickly. They also cheated. But
they banged on that garbage can.
It was only a couple of years later, a year or 2 years later, after they made this move that said, we're going to take one step back in order to move 2 steps forward, that it worked.
Mm-hmm.
Again, with cheating. But I understand it in the world of sports. Sometimes we call it a rebuilding year, right? Is it possible that's what's going on with what Trump is doing right now, with wiping everybody out with these Doge cuts that seem completely arbitrary?
The way you explain it makes a lot of sense. And if I could be promised that a little bit of pain would lead to long-term gains, I'm in. And I think most of the country would be.
Well, you are until it's your job. I mean, are you willing to quit? Would you quit your job today if it meant the rest of the country does better tomorrow?
Do I get guaranteed I get a better job?
No.
Do I get guaranteed I get as good a job?
No.
No.
But it might be better for other people.
Too bad.
Okay, so it's easy to volunteer other people for short-term pain.
Mm-hmm.
As long as you can see long-term gain.
I'm not saying that. You set me up for that.
Jim Rounds is a Valley economist. He's the president of Rounds Consulting, and he joins us right now. Jim, is there any merit to having a rebuilding year when it comes to the U.S. economy?
You know, that was one of the best explanations, the Astros and then banging on the garbage can.
Oh, Jim.
I guess the question is, are we going to be banging on the dumpster fire? It just goes bad. I mean, we got to look at the facts on whether or not he's trying to do it. What I think they're expecting to happen is that we're going to readjust very quickly. And like within a year, all of a sudden you would have that higher paying job. In reality, it's going to take a lot of years for the economy to completely shift based on what they're doing. And, it's multiple. We talked before about tariffs. You end up with having higher prices. You have inflation. We're not going to have any potential cuts by the Fed. That's going to constrain economic growth by itself. But all these cuts, it's not necessarily being surgical with the cuts. It's just broad-based cuts. It's not so much the cuts, it's the fact that it's coming after an extended period where all we did was spend. We spent far more than we should have. We increased the national debt by $10 trillion over about 4 years. So we had a bunch of extra spending, which buoyed the economy, and now we're cutting the heck out of it, which is the difference between the two is what would cause a recession. So there's potentially that risk out there. I just don't like the argument that they're doing it on purpose, that we're going to suddenly come out the other end all rosy, because it's going to take years and years and years before the businesses are going to adjust for the tariff issues. It's going to take years and years and years before we figure out how we're going to take care of the individuals that are losing their jobs, that are going to then be applying for government services. And then we have this last thing, which is this big potential cut to Medicaid. The cut to Medicaid that they're talking about is the equivalent of the job losses that we had during the Great Recession. So that directly would put us into a recession. But I'm thinking that if this hits a bunch of other states as well, there'll be some pushback. But they're oversimplifying how the economy works. Nothing works that quickly.
Talking with Valley economist and president of Rounds Consulting, Jim Rounds, who joins us right now. Jim, what do you think the White House is trying to do here? You say this won't be able to be done quickly. It'll take years and years. But do you think that they are trying to cause a recession and that the end goal is to make things better? Or do you think something else is afoot?
I think that it's probably a strong political statement. We're going to implement policies that most people that work on, fiscal policy or economics are going to say is going to cause a recession. So how do you cover for that if you're a politician? You say, well, I meant to do that, of course, and we're going to be better for it. You break your arm, it heals back, it's stronger than it was before. But what if it takes 7 years for your arm to heal? Well, that could be a potential problem.
Yeah, a big problem. Jim Rounds, Valley economist, president, Rounds Consulting. You talked about the overspending that we had in the past. New budget proposals are nowhere near balanced. We're talking about adding another $4.5 trillion to the debt over the next 10 years, and that's the first offer on the budget. If we do see a recession, I mean, are we putting ourselves in a position to not just have a recession that is 1 or 2 quarters, but 1 or 2 years?
Well, you know, maybe.
Yeah.
It really depends on how much they push. So, like I mentioned, the Medicaid, they're trying to get to $1.6 trillion, which is the value of extending the tax cut. So they're targeting a dollar amount. That's why they're looking for big ticket items. They're realizing that you can't just cut a bunch of small programs in government and have it add up to trillions of dollars. I mean, that would be over a decade, but it's still a lot of money. So you have to figure out what else are you going to cut. But another thing people aren't talking about is there's a whole lot of economic uncertainty right now because of what's happening. What happens when there's economic uncertainty? You start to see problems with the stock market. If you see problems with the stock market, you're going to see people get a little bit worried about their retirement. They might pull back on spending a little bit. That could cause some problems. And recessions are never caused by one thing. They're usually caused by 3 or 4 or 5 things happening. And we're seeing a lot of things happening right now.
Talking with Valley economist Jim Rounds. Jim, I'm glad you went there. What signs are you seeing that we are headed towards a recession? I've seen some of the poly markets saying about just south of a 40% chance that we're headed towards a recession. Are you seeing signs that we're headed there? And what should people be looking out for that's the alarms going off?
Yeah, it's become difficult since the COVID recession. I make a joke all the time about how economists have predicted 10 of the last 0 recessions.
Yeah.
But we probably would have had that downturn if we didn't have all that extra federal spending that kind of buoyed the economy. If you take a look at jobs, the threshold that you want to look at every month, you know how there's that monthly report about where their jobs exceeded the forecast or whatever. Ignore that. It just means that the forecast was bad if the numbers didn't match the forecast. But if you're still seeing 150, 200,000 jobs being created, which we are, then that means that we're in okay shape. That's one of my favorite measures to look at. There's a thing called the leading economic indicators, which throws 10 statistics together, and you track a line. When it's going up, things are going to go well. When it's going down, things are slowing. It's been going down, but then it stabilized a bit. But a lot of this economic data that we used to look at, and it would be definitive, oh, we're definitely headed for a recession. You just have to read these things different because we had the last 2 recessions were highly unusual, which means the last 2 expansion periods were highly unusual. And it's hard to read that. So we have an unusual just economic environment with a very unusual approach to government spending, and things are up in the air. It's hard to know. I get asked by family members every day, should I be moving money out of the stock market? And I have to say, I don't know.
It's like I've got an uncle who's a doctor, and I say, "Hey, you want to take a look at this?" And he says, "No, make an appointment." I think it's funny that they're asking for that advice on the stock market. Jim Rounds, a Valley economist, president of Rounds Consulting. One more quick one: how is Arizona positioned this time around? I know I think back to the Great Recession, and obviously our housing market, for instance, was inflated, and so it was us, Las Vegas, and Southern California that got hit really, really badly. If we're headed toward an economic slowdown right now, we do have some good things going on. TSMC not only building, but now announcing a new expansion. We've got Mayo Clinic expanding, this sort of thing. Where is Arizona positioned as far as weathering the next storm, which will come, whether it's in this year or 10 years from now, it will come. How are we doing now compared to past years?
So if we exclude that federal noise, we have been adding higher wage jobs, which has been a problem for multiple decades. After the Great Recession, we fixed the tax policy. We got rid of some regulatory problems, added economic development projects and tools, and all of a sudden we've been seeing increases in income. So you want to grow your economy, not just in volume, but also in terms of quality. If I was going to be in any state during the next downturn and then expansion, it would be Arizona. But there's things that we have to work on. We can't maintain that current economic momentum that you're talking about if we don't step up a little bit more on workforce training and some things like that. In fact, regardless of the cuts that the federal government's looking at, the only way we're going to deal with the national debt issue is increasing productivity. That allows people to make more money, pay more in taxes, and then you can start eating into that debt. How do you increase productivity? You learn stuff and you get new tools. How do you do that? You get an education and you invest in capital. So a lot of this goes back to some basic economics. Sometimes you got to spend a few bucks to make even more.
Jim Rounds, Valley economist, president of Rounds Consulting Group.
Jim, we'll reach out to you the next time we have to hit the economic panic button. We appreciate you.
Sounds good. Take care.
Thank you so much, Jim.
Thanks for watching The Chris and Joe Show. Click to see more from Chris and Joe and tap the button in the middle to subscribe to KTAR News.